Hello and welcome to this video. In this video, we will analyze the Coca-Cola stock, which trades under the ticker symbol KO. First, we will provide an overview of the most recent financial results, and after that, we will look at the Coca-Cola stock from a value investment centric perspective. In the end, we will look at the current price and other key factors to determine whether it is the right time to buy the Coca-Cola stock or not. Coca-Cola is a dividend-paying stock, and Coca-Cola is scheduled to pay a 42 cents quarterly cash dividend on October 1, 2021. So Coca-Cola has been in business for 135 years. It has around 200 master branches, and its products are sold in 200 countries and territories. And most of their revenue comes from North America, followed by bottling investments and Europe, Middle East, and Africa. And now let's have a look at the recent financial results. For its fiscal second quarter ended July 2, 2021, Coca-Cola's non-GAAP net operating revenue increased 41.1% over the year to $10.13 billion. The company's non-GAAP gross profit came in at $6.22 billion, representing a 50.4% year-over-year improvement. Its non-GAAP operating income was $3.21 billion, which was up 49% from the prior year period, while its non-GAAP net income increased 61.5% year-over-year to $2.93 billion. Its non-GAAP earnings per share increased 61.9% to $0.68 or 68 cents. The company had $9.19 billion in cash and cash equivalents as of July 2, 2021. And analysts expect Coca-Cola's earnings per share to increase 5.5% in the current quarter, which ends on 30th of September 2021. 15.9% in the current year and 7.5% next year. Its revenue is expected to improve 13.4% year-over-year in the current quarter, 15.1% in the current year, and 5.7% next year. The stock's earnings per share are expected to grow at a 10.1% rate per annum over the next 5 years. And as far as the opinion of analysts is concerned, so based on 14 Wall Street analysts offering 12-month price targets for Coca-Cola in the last 3 months, the average price target is $62.07 with a high forecast of $65 and a low forecast of $59. The average price target represents a 15.18% change from its current price of $53.89. And now let's have a look at the biggest developments this year. So on April 19th, Coca-Cola and Coca-Cola Beverages Africa (CCBA) announced plans to list CCBA as a publicly traded company on the Amsterdam and Johannesburg stock exchanges. As Africa becomes a key growth market for Coca-Cola, this IPO should allow CCBA to operate as an independent, managed and domiciled business and gain a broad, supportive, long-term investor base for the continued development of the business. Therefore, due to all these current events and major news, I had to cover the Coca-Cola stock so that we can look at Coca-Cola stock from a long-term value investment centric perspective without getting caught in the hype and also take into account the performance of Coca-Cola during the past years. I believe it is always better to do our own research so that we don't end up paying more for the value that we are getting while investing. And if you watch this video till the end, you will understand my whole thought process, which I use to shortlist stocks from a value-centric investment perspective. Now let's analyze the Coca-Cola stock through our 14 value-centric dimensions to evaluate its feasibility as a long-term value investment. I will also be interested to see how much score we get out of 100 for the Coca-Cola stock. So as always, I will also be interested to see if we can get a score of over 75% over the time frames of 3, 5 or 10 years and see the parallel or correlation between our feasibility analysis and the opinion of analysts. In other words, I will be interested in seeing how well our dimensions converge to the same conclusions as the analysts. Later, if our dimensional analysis validates its feasibility as a good investment, we will look at the current state of the market through the lens of 6 critical dimensions to gauge if it is the right time to accumulate Coca-Cola stock, or shall we wait for the market to offer it to us for a cheaper price, so that we get more value for the money that we invest. So let's go ahead and first analyze the Coca-Cola stock via the 14 dimensions of value-centric investment feasibility. So first of all, we look at the high-level numbers. So the current price of the stock is around 53 US dollars. The current market cap is 230 billion US dollars. The current PE ratio over the trailing 12 months is 28.5. The earnings per share over the trailing 12 months is 1.79 US dollars. The current price to book ratio is 9.5. The current price to sales ratio is 6.3. And the current price to free cash flow ratio is 26.6. And over the last 5 years, the average yearly revenue growth has been -5%. The average yearly asset growth has been -1%. The average equity growth per year was -3%. And the average yearly net income growth was 70%. And the average yearly liability growth was 1%. And now let's have a look at the total revenue year over year. So the total revenue increased from 35 billion to 46 billion from 2010 till 2014. But then it gradually dropped from 2014 till 2020 from 46 billion to 33 billion. And as far as the net income is concerned, the net income dropped from 12 billion in 2010 to 8 billion in 2020. And from 2015 till 2020, the net income increased from 7 billion US dollars to 8 billion US dollars. And during the time frame of the last 10 years, the maximum revenue was achieved in 2012, which was 48 billion, and the minimum revenue was in 2020, which was 33 billion. And the maximum net income was in 2010, which was 12 billion, and the minimum net income was in 2017, which was 1 billion. And now we look at the diluted shares outstanding. So in 2010, the total shares outstanding were 5 billion. And in 2020, the total shares outstanding have dropped to 4 billion, which is a 1 billion decrease in the total number of shares over the last 10 years. So we can see over here that the maximum shares outstanding were in 2010 and the minimum shares outstanding were in 2018, which were around 4 billion. And now looking at the free cash flow, so in 2010, the free cash flow was 7 billion US dollars, and in 2020, the free cash flow was 9 billion US dollars, which is excellent because free cash flow is very important, because it is the leftover money which is used to pay dividends and to make acquisitions and so on. And the long-term liabilities increased from 42 billion in 2012 to 65 billion in 2019. So the maximum free cash flow was recorded in 2019, which was 9 billion. And the minimum free cash flow was recorded in 2017, which was 5 billion. And as far as the maximum long-term liabilities are concerned, the maximum long-term liabilities were recorded in the year 2016, which was 7 billion. And the minimum long-term liabilities were recorded in the year 2010, which was 7 billion. And this graph over here is very important because it shows us that if we sum up the free cash flow over the past 5 years, will it be more than the long-term liabilities, or will we be able to pay the long-term liabilities with that? So I want this graph to be over 1 in the ideal scenario, but over here we can see that no, it is not the case. And now we will look at the average, minimum and maximum ROE and ROIC during the past 3, 5 and 10 years respectively. I will go over these numbers during the past 5 years. Feel free to pause the video and look at the same numbers for the last 10 years and for the last 3 years. So over the past 5 years, the average ROE was over 15% and the average ROIC was under 15%. The maximum ROE was recorded in 2019, which was 44%, and the minimum ROE which was recorded was in 2017, which was 6%, and the average ROE during the past 5 years has been 29%. The maximum ROIC was recorded in 2019, which was 14%, and the minimum ROIC was recorded in 2017, which was 2%, and the average ROE during the past 5 years has been 9%. And now let's have a look at the overall score of the 14 value-centric dimensions over the last 10 years, the last 5 years, and the last 3 years. These scores show the feasibility of the stock as a long-term value investment over different time frames. Feel free to pause the video if you want to look at each one of the dimensions and the result of it in a certain time frame. So we get an average score of 57% over the past 10 years, over the past 5 years, and also over the past 3 years, which is well below the score of 75%, which we look for. But here is the reason for this low score. We don't expect the free cash flow and the net income to be growing at 10% for such large companies. It can happen, but in the beverages market and consumer goods, it is very difficult to achieve. And the same is the case of operating income. As I always say, the dimensional analysis is a disciplined approach, and we need to have the diagnostic skills to look beneath the surface, and we also need to consider the industry averages of these ratios and numbers and so on. So we conclude that the result of our dimensional analysis agree with most analysts about the Coca-Cola stock, who have given it a moderate buy rating. Now we need to answer the question, is it the right time to buy the Coca-Cola stock? So before I press trigger, I look at the state of the market to see the price, sentiment, and hedge fund activity to see if it is the right time to buy or shall we wait. In other words, we look at the 6 dimensions of market state before making a final purchasing decision. So looking at the PE ratio range over the last 3 years, I normally look for companies which have a PE ratio of less than 20. So in 2010-19, the PE ratio was between 29.05 to 22.73, and in 2020 the range was between 29.58 to 18.64, and in 2021 so far the range has been between 27.83 to 22.95. So in 2020, at some point during some months or some weeks, the PE ratio did go below 20. So that would have been a good time to accumulate some Coca-Cola stocks, but we didn't, since we were not monitoring the Coca-Cola stock at that point. And looking at the NLS forecast, so based on 14 Wall Street analysts offering a 12-month price target for Coca-Cola stock in the past 3 months, the average target is $62.07 with a high forecast of $65 and a low forecast of $59. The average price target represents a 17.69% increase from the current price of around $53. And as far as the price is concerned, we can see that since the 6th of October 2016, the price has hiked from around $36 all the way up to around $57. And we achieved the same high price of around $57 on February the 14th, 2020. And then we can see that the price dropped from $56 to around $36 in a matter of weeks. And that would have been an excellent time to accumulate the Coca-Cola stocks. And since then, the price has again increased consistently. And now we can see that the price is dropping again. So I won't catch the falling knife right now. And I will let the price to correct a little bit so that I can accumulate the Coca-Cola stock when the PE ratio is less than 20 or when it is available for discount. And now let's have a look at what the smart money is doing or what the hedge fund managers think. So we can see that the smart money or hedge fund managers agree with me, and they are not buying any more of Coca-Cola stock since June 2019. The reason is the high PE ratio and slow growth rate. And now we compare the Coca-Cola stock with the similar stocks. So as far as the similar stocks are concerned, Coca-Cola has very high PE ratio as compared to similar stocks on tip ranks. It sits right at the bottom and it is only above KTP, so this dimension is also a fail. So now looking at the insider trading, we can only see the number of transactions over here. So the sell transactions are way too high as compared to the buy transactions. So this tells us that the Coca-Cola stock is currently overpriced. Therefore, we conclude that currently the Coca-Cola stock is overpriced and we need to wait for the PE ratio to come down below 20 so that we can start accumulating again. Please let me know in the comments below, do you like the Coca-Cola stock or not? Would you buy the Coca-Cola stock at the current price or not? I will like to see your opinion. I hope that you like the content of this video. If you would like to see such videos with my unbiased opinion and my own unique style of analyzing stocks, please drop a like, subscribe to my channel, and I will see you in the next video.